Yo, what's going on, everybody? It is, Tuesday, May 30th. Almost June, man. Almost half the year. Got a little bit of a new look for the summertime. Anyway, let's talk about what's going on. So it looks like they're still wrangling over the debt ceiling agreement. And now the Freedom Caucus in the House, they want to get rid of McCarthy, which I think there was something, one of the concessions that McCarthy gave the right-wing GOP in the House was, in order to become Speaker, I think they made it really easy for them to get rid of him. But I don't know. I still think the deal's going to go through. Now I see a lot of this going on in the news. I see a lot of headlines saying, kind of like, buy the rumor, sell the news. In other words, everyone was hanging in there waiting for the debt ceiling. Now they have an agreement to raise the debt ceiling. And so, they're all saying, now you got to sell. And most of the rationale that I see behind the now you have to sell thesis is, once again, it falls back on the interest rate argument, or the interest rate, quote unquote problem that we've been hearing about now for 2 years. Meanwhile, the market's climbing back. Meanwhile, the NASDAQ's almost back to its high. Meanwhile, these AI stocks are blowing through the roof. And I mean, that's just wrong. I mean, they're not going to understand it. The market could go to 50,000 and rates could go to 10%, and they're still not going to understand it. I mean, that has become a major source of fiscal flow. Right now, just between the addition of interest on Treasury securities and the discount on T-bills and new issues, that's like almost 300 billion. It's like 260, 270 billion. Or 200 billion. I'm sorry, I have to look at the numbers again. But if you add in Social Security to that, the amount, and I'm talking about the amount over last year. That's not the total amount. The total amount is huge. The amount over last year between Social Security, interest on Treasury securities, and the discount on T-bills and other instruments, you're talking about close to 300 billion. That's half the fiscal year. And don't forget that interest on treasuries, that's still like in the very early stages. I keep saying that, but it's something you have to understand, because a lot of these maturities, they're longer term maturities. It's going to take time for them to mature with a higher coupon. So you're going to get the feed through, the interest feed through. I mean, somebody tweeted, and it was a correct tweet, and it came from somebody in the UK. Like, they were highlighting, they had strong retail sales numbers, and somebody tweeted, well, what do you expect? I mean, the government raising interest rates is paying money into the economy, and people are spending that additional money. And that's exactly what's going on here. That's why I said, as long as we don't have a problem with the debt ceiling, we're not going to have a recession. I was the only one saying that. If you recall, I was the only one, and this was going back to late 2022, when they were already saying that a recession was a foregone conclusion in 2023. I said my only qualifier was the debt ceiling. If you didn't raise the debt ceiling, then yes, you will have a recession. But I think, that's still going to happen, despite, the hem and hawing and the protests among both sides, really, the progressives and the hard right GOP. I mean, they're both sides, but I think it's going to go through. It has to go through. Then there's another thing I'm seeing, where some are saying, well, you know what that means? It means that the Treasury is going to immediately have to raise like 800 billion through massive sales of, like T-bills and stuff like that. And that's going to drain cash from the economy. T-bills are cash. I'm sorry. They're dollars with a term, and they happen to have a very short term and an interest rate. And you know, I've been a trader for a long time, and we used to post T-bills as margin all the time. It was not, I mean, you don't lose buying power in the stock market because you got T-bills in your account. I mean, I was a futures trader for years on every exchange and every brokerage firm that I dealt with. You know, we keep our money in T-bills. That was our margin money. So, I mean, that's not an issue. What is an issue, which I have not heard anyone talk about, is the June 15th corporate quarterly tax drain. That's going to happen, and that's going to cause a market reaction down. And everybody's going to say, you see, it's the debt ceiling, and we were right. We told you not to sell. But I'm telling you right now, if that happens, if that debt ceiling, if that debt ceiling pullback, not the debt ceiling pullback, the quarterly interest payment pullback happens, and it should, it will. They always happen every quarter. That is a major buying opportunity, especially in these hot NASDAQ stocks, these artificial intelligence stocks. Look at NVIDIA. I mean, there's some others out there. I mean, that is it. I mean, I said, you know, and I want you to know this, that the debt ceiling bill, the agreement they came to, from what I could see, establishes $500 billion or more a month as a baseline leading monthly spending flow. It doesn't cut it down. If anything, that's a minimum baseline. It's going to go up. And that has been enough, you know, to sustain, you know, like a moderate pace of growth in the economy, 2.5%, 2.7%. And the same thing is going to happen. I mean, it's hang on a second. There we go. It's going to stay the same. As a matter of fact, it's going to get more. There we go again. I got my window open. We're in a very popular ambulance route because there's some major hospitals down the street. Anyway, you got increases in Social Security that are going to be coming. You have and not just cost of living increases, you have increases due to aging seniors. I'm going to get my Social Security this year, man. So like, it's just, that's your baseline, is $500 billion a month on the low end, sustained at least until 2025. And that's I'm only saying 2025 because that's when the deal ends. That's when, you know, they'll raise the debt ceiling until 2025. After that, you know, they're going to have to raise it again. I mean, they have to. They're not going to default. So all this stuff that you're hearing about, this negative stuff, I particularly love the stuff about, you know, hey, it's going to go down because the Fed has to raise interest rates. They've been raising. They raise it 9 times. They're going to raise it 10 times. We're almost... You know, some stocks are near their, you know, some of these tech stocks are almost back to their all-time highs. I mean, this guy Mike Wilson at Morgan Stanley, he's still negative. He's never going to stop being negative. And then saying they're going to drain money because they're swapping out, you know, reserves for T-bills. That's just ridiculous. People don't know what they're talking about. Like, we use T-bills as margin when I was a trader. And still to this day, I mean, for so long, this is the same collateral as cash, and it takes nothing, no drain. If you're going to talk about a drain, then talk to me about a tax drain, and then I'll listen to you. If you're not going to talk to me, because a tax drain, that's it. I mean, they're taking that money away, and then we got to wait for them to spend it back in order to have it back in the economy. And we know this. We go through this every quarter or 5 times a year. But this thing, or they're going to have to sell T-bills, and that's going to be the end of the world. That's the most ridiculous and uneducated and stupid thing I ever heard. So that's crazy. Anyway, it's bullish. The worries are over. The only thing I would say is if by some small tiny chance they don't pass this stupid bill, which I'm pretty sure they will, but who knows? Like, you never know with these people. Then there could be some turbulence, but they're going to have to do it. They're going to have to do it. Anyway, that's it for today, folks. Hope you're having a great day, and see you tomorrow. Bye.